Ready to go. So please give a very warm welcome to Gabrielle and her panel.
Okay, good morning, everyone. It's nice to see so many people here this morning. I think I'll introduce myself very shortly. My name is Gabrielle Patrick. I've been a lawyer in the blockchain space for a couple of years. I believe our official chair has arrived, Richard, so I will pass it on to him.
Oh, hello. I'm Richard Levine. Apologies for running late, everyone. I'm the chair of the FinTech and Regulation practice at Polsinelli, a national law firm in the United States of about 850 lawyers. I've been a FinTech lawyer since 1999 and focused on crypto since early 2011. And I'll turn it over to the rest of the speakers to introduce themselves.
Thank you. Good morning. My name is Philip Young from the Gibraltar Blockchain Exchange, director of the Gibraltar Blockchain Exchange. And the GBX is launching a world-leading cryptocurrency exchange and token sale platform with a view of introducing best practices and a corporate governance framework to the token industry.
Hello, everyone. My name is Letitia Segler, and I'm an independent expert at the European Commission. I look at proposals and policies around disruptive innovation.
Hi, everybody. I'm Brian Donegan from the Isle of Man government. I'm head of ops for FinTech and digital innovation.
So we have 25 minutes to cover a topic that we could probably spend an entire day covering. So as the moderator, unfortunately, I'm going to exercise my prerogative that if anybody's giving more than a 2 or 3 minute answer, I'm going to have to ask you to stop. But the first question that I wanted to put to the panel is, what is the difference between a cryptocurrency and an ICO? Would anybody like to jump in and help walk us through that?
Sure. I would say that digital currency, I think everybody knows Bitcoin and Ethereum and Ripple at this stage. I think they're fairly well defined as digital currencies or cryptocurrencies using cryptography to create a currency on the internet. So it's the internet of money. An ICO is the creation of a token. So if I was to launch a ICO and call it Brian token, people can actually buy my Brian token and get access to my goods and services, but they would typically have to use Bitcoin to actually buy my token. That's it in very, very short order.
Yes, just to extend that from Brian. So one is a product and the other is a process. And in terms of the process, it's actually something that's interested many of the audience here. But if you look at myself, you're seeing here the result of a process of an ICO, very much older and very much wiser after 6 months being involved in our own token and being involved in the token market industry. So one is a product and the other is a process, neither of which are easy.
So we've seen in the media that countries are actually barring token offerings. We've seen South Korea, we've seen China. Is there such a thing as a utility token? Some people love to call what they're offering a utility token. Is there anything that actually is a utility token?
Yeah, I think if you look at the ICOs and I can only talk about the Isle of Man because it's the only one I know where we've had direct involvement with the process. So we would typically evaluate ICOs in the context of their utility or whether they're a security. So a security obviously is a financial services type of product, and so our regulator would determine whether an application was either a security or a utility. So if it's not a security, they would focus on the utility aspect of it in terms of whether you get access to the goods and services that are being proposed and offered by the applicant. That's the entity that's actually launching the ICO.
That's interesting because in the United States, the chairman of the Securities Exchange Commission, a former very prominent securities lawyer, said in a speech recently that we've seen a lot of, at the SEC, we've seen a lot of people claiming what they're selling is a utility token. And he said, I haven't seen one yet that looks like it's not a security. So in the United States, it's a safe bet that if you're offering a token, the SEC is probably going to deem it a security no matter how much you try to claim it's a utility token.
No, I don't agree with that view at all. I think if you look at the context of the SEC opinion so far, they do actually recognize utility tokens, and they recognize that you could sell a token in exchange for some sort of user-based benefit. I don't agree with that opinion. And I think that that is something that has also been recognized here by the FCA. So in that extent, it's not new.
I would have to disagree then, because the United States Securities Exchange Commission, I've represented a number of firms that have been sued. And in every case, the SEC is going back to a case called Glenn W. Turner, which was a fractional interest in a cosmetic scheme, where the SEC said in 1972 that that was even a security. The Howey test that everybody loves to banty around in the United States was a fractional interest in an orange grove. You can try to argue that something's a utility token, but you're more than likely going to be calling me to help defend you in an enforcement action if you do. Because the SEC's basis of jurisdiction is that something is a security, and if they think it is, they're going to go after you, and then they'll let you litigate it through the courts in order to prove that it's not. So hypothetically, yes, you can try to claim something's a utility token, but I would not advise it in the United States.
Yeah, I think that's probably the story of 2018, the developments of what the SEC do with looking back over the last couple of years with security raises or token raises in the United States, what they do to actually come after the people that they believe have been actually selling unlicensed securities. It's going to be a big story for 2018, that regulatory development, and how that leaves the US in terms of a market for raising capital, I don't know. But maybe, as we progress, that in time, the distinction between security tokens and utility tokens will no longer exist. They'll just be tokens. But at the moment, there is a need to have an obsession to create this classification between the two. I think the short answer to your question of whether the utility tokens exist, in my book, yes. In the SEC's book, probably not. But there is a bigger world outside of the US. But for the time being, it is what it is.
I think, Rick, just in that context, the Howey test is the definitive litmus test for a lot of applications in terms of whether they're utility or whether they're not. From our perspective, when we come across an applicant that we have a question mark over, and if it fails the Howey test and it is a proper security, then we would then have a sidebar conversation, or the regulator would have a sidebar conversation with that applicant in relation to collective investment schemes. So there's probably a second strand to the process as far as we're concerned as a jurisdiction. So we would still determine if the business is still worthy of engagement and investment, but we would ask the regulator to have a parallel regulatory process. One will be for the ICO and another one for the collective investment scheme. So it acts as a sort of a dual safety measure, if you like.
Well, and I don't want to focus only on the SEC being the American coming to Britain. I know that always annoys my friends here. If you had to pick a jurisdiction that was, let's say, more open-minded about a utility token or an ICO that is not a security or an investment contract or investment scheme, what jurisdiction would you pick?
Well, I'm probably the wrong person to ask because I have a natural bias, but from our perspective, I think we spend a lot of time looking at the quality of the white paper, but we also spend probably a disproportionate amount of time on the caliber of the dev team, and we go into a lot of depth because we know that in the ICO space there are a lot of there's a lot of criminal activity, there's a lot of negative press, and it's there for a reason. So we have a vested interest in making sure that we filter everything to the fullest extent. And so whether it's a security or whether it's not is one issue, but a far greater issue for us is what quality is the white paper and what quality is the dev team. We spend a lot of time with that.
Letitia and Gabrielle, what do you think?
I would actually pick Slovenia, interestingly enough. Slovenia, little country in the Balkans, in Eastern Europe, because I think at state level they're really making some advancements. It's not only private companies that are entering into tokens and ICOs, but also they're implementing that in terms of ID and verification. So it's a small country, 2 million population, but I think it's a good testing ground in terms of getting your ICO project out there and actually implementing that at state level as well.
Any others?
I think the UK is a jurisdiction that I think has been very open to innovation, especially in the recent past. I'm not too clear on how Brexit affects that drive, but my impression of them is that they are quite open to the concepts of token distributions and utility tokens. My view is that regulation, like everything else, is a business, and so there are many jurisdictions looking to obtain and acquire that business. One of the jurisdictions that I'm aware of that is aggressively pushing for that niche of market is Bermuda. Bermuda has made open statements of trying to become a cryptocurrency haven, and my interaction with them suggests that they are actively attempting to acquire token distribution companies.
I'd also include Singapore. The reason I would include Singapore, I think for a country of its size, it is punching far above its weight. It has been extremely active in providing guidance. They actually published a paper helping people understand how something could be a token or something could be a security or an investment product. And I think that they are also very open with their sandbox, their regulatory sandbox, to a dialogue with the industry. The only issue is that it's a very small country, and if you're looking to sell your token or your tokenized security into a country like China or the United States or South Korea, for example, being based in Singapore and doing the offering from a Singaporean entity may not help you.
No, that's great. Yeah, I think if we're looking at supportive regulators in countries around the world, they're few and far between, and sometimes it feels like they're shrinking. So I think of the handful, as Richard said, Singapore and the MAS, Japan, they're very open, very flexible. But in terms of flexibility and open-mindedness elsewhere, you have to look at maybe Switzerland to a certain extent. Please don't forget Gibraltar. I mean, Gibraltar itself is even smaller than some of the countries mentioned here, but they're one of the first countries, first governments, first regulators in the world to introduce a framework, a regulatory framework. The distributed ledger technology framework came into effect in January this year, and something that the world is looking at, including Bermuda. Yes, throughout the year there'll be further developments. I think there'll be regulatory principles being applied to the ICO space as well this year. Another little jurisdiction that's punching above its weight. But these are the sort of jurisdictions that are taking global leadership, and the other regulators, such as the FSC, the FCA, and others are again applying the sandbox approach, which is fantastic, and it's a long-term play. But for us, smaller jurisdictions, including the Isle of Man as well, we're all taking a leading part in trying to drive this industry forward, and that's what's required.
So one of the questions we've been bantering around as a panel is, what is the main incentive or blocker in startups migrating to or staying in any one jurisdiction? So if you wanted to base your business in the Isle of Man or Gibraltar or Singapore, what kind of problems or benefits do you potentially face?
I guess in the case of the Isle of Man, we were very early into the crypto space and the ICO space. Back in 2014, we started to see a lot of interest from crypto business, but that was predicated on the fact that in the previous 10 years, we'd established the jurisdiction as a center of excellence for e-gaming or gambling online, and it's currently 20% of our GDP. So when crypto started to happen in 2013-14, the crypto community were looking for a jurisdiction to call home. And so they arrived in some considerable numbers in the Isle of Man because they'd actually made up their mind that that was the place they wanted to be. But we didn't have an underlying regulatory framework to suit them, and we are a small jurisdiction, so we very, very quickly realized the opportunity and put in place a regulatory framework to suit the industry. And it was the Proceeds of Crime Act, which was the underlying 2008 regulation, which we amended to capture digital currencies for AML. And we introduced some secondary regulation around KYC. So we had a registration and oversight process for applicants that wanted to come in and set up digital currency exchanges. That regulatory framework was essentially, or that registration and oversight framework was essentially the same framework that ICOs latched onto when they started to happen in 2016. That's principally why we started, as a jurisdiction, started to get some traction with ICOs. We also launched the first AML compliant ICO in the world in January 2016. So we just naturally started to attract a lot of that business because of our pedigree.
So Gabrielle and Letitia, do you either of you have a suggestion of where you would set up a business?
Yeah, I think you've really underpinned the basis that it's that regulatory engagement with businesses and that agility. And in terms of other countries where I see this trend, it's places like Estonia, the Netherlands, again, Slovenia, some of the smaller Balkan countries. And it really depends on where you want to be geographically. But if it's the Middle East, I would look at Dubai as well. And then, of course, Singapore and the UK as well. But I think it's really, that regulatory engagement, if you see that regulators in countries are engaging in dialogue as opposed to, just banning, certain activities, I think that's an indication that they're actually open for business and willing to work with participants in the market to actually develop a framework.
Yeah, I would have to say that I agree with every one of the panelists that having a dialogue with your regulators is key. And it sounds contrary. Most business people think, I don't want to see my regulator until I absolutely have to. And what you really want to do is develop a relationship with your regulators, have a dialogue, introduce them to your business, help them to understand what you're doing, because it's much better to find out early in your business if you're doing something that's going to raise their eyebrows or cause problems than when they show up with, in the United States, it's the guys in the blue and yellow jackets, the FBI, who come to arrest people. And I do have a client who was arrested as part of a token offering. We did not counsel on the token offering. We're advising him on his lawsuit after the fact. And I don't like getting calls from clients at 5 a.m. saying, I'm about to be arrested by the FBI. So I don't think you want that in any jurisdiction in which you're operating. So having a dialogue with your regulators is key.
Can I just add to that? I think the two, from a startup perspective, I think the two major points I would look at are regulatory engagement / ease of communication and banking. So if it takes me 1,000,000 years to get to the right person to explain what Bitcoin is, they're not really going to understand what my new hybrid innovative model is. So the jurisdictions which have been open, which have dedicated resources to understanding what new models and innovations are, those are the jurisdictions I'm going to go to because I could get my answer very quickly. And then, in my business, I don't have 6 months or a year to figure out whether I can or cannot do business in that jurisdiction. And I'm saying that from a personal experience whereby I tried to push one type of model in a particular jurisdiction, I wouldn't name which one, and that regulator definitely cost me my competitive edge. By the time they figured out that they didn't understand the model, my competitor had already launched and I was put, at a disadvantage. The other point that I think is exceptionally important is banking. So even though some jurisdictions have, I think, made a genuine effort to push innovation and competition in the market, that effort, to my mind, is almost countermanded if I can't get a basic bank account. So maybe I'm fortunate to raise